Hi, everybody. The S&P 500 has just broke through 5,000 points, and many of you are asking the question of whether can I still buy or should I sell? So if you recall, about 10, 11 days ago, I make a bet, okay? I make a bet that the tech stock will rise, okay? And S&P 500 will cross 5,000 points by June. Well, June come a bit too early. So right now is February, and the S&P 500 has indeed crossed 5,000 points, right? So congratulations to all that has made money, and and today a lot of people will be asking the question, should I sell or buy? In fact, I get more question on Mr. Loo, should I buy or not, or can I still buy? Because quite a lot of you have missed the boat. Well, I'll attempt to ask the question right now. So as at right now, my recording time, the S&P 500 is registering 5,004 points. It's still going up. Of course, we should expect some volatility, and maybe by the end of the close today, it might drop below or go further up. I don't know. But the good thing is that it has just broke through an all-time high and a significant 5,000 points. So before I go on further, today's advice is purely my view as an education entertainment. It's not advice for you to buy or sell. These are my disclaimers. Please read carefully. And let's go. So on the question of Mr. Loo, can I still buy? This is my personal view for myself, okay? So we have got three strategies we can consider on the buy side. The strategy one is if we buy now, we will be buying now at an all-time high for S&P 500. What's the pros and cons, right? The pros is that it gives you comfort that that the human psychology likes to buy assets when it's going up. You look at condominiums, you look at private houses, you look at HDB, it's going up and up and up, and everybody chong into it, right? So it's feeding a human need to see an asset going up before you buy, right? So that gives a lot of people comfort, and it's quite strange because for every other things we like buy it when it's going down, right? When it's down and low. But this one, when it comes to asset, everybody like to chase it when it's going up and up and up. So whether is it Rolex watches, or whether is it Bitcoin, or whether is it stock market, or is it property, people like to do the reverse. So the cons is that you might hit a period of retracement, right? The stock market might go down, it might go very much down, right? So, well, let's see. Okay. We have a similar situation. I'm not saying it will happen, but a similar situation had happened in 2019. The stock market have a sizable dip, okay, correction, and then it rebounded to an all-time high, okay, somewhere in 2019, somewhere around May time. Once it hit the all-time high, it retracted by a huge dip of 7.5%. And we should not, at that point in time, everybody must see, oh, this is a bear market rally. That's why we got caught in a bear market, right? So, but this 9.5% fall might hit a lot of people, and all of you might feel it's terrible, right? And then we'll actually it will go up again, and then you retrace again by 7.5% before it go up again. So if you buy at an all-time high, okay, you might miss the opportunity of buying at a retracement, right? And retracements are part and parcel of a stock market bull run. There's very almost never seen before a bull run that just go up and up and up and up and up, never have a retracement. The second suggestion by a lot of people is, oh, I'm going to start dollar cost averaging right now, right? So let's take a look at it when the pros and cons. So dollar cost averaging is a philosophy where you do a buying of stock market at regular intervals. Okay, you just keep buying, maybe every month, every quarter, or whatever, and keep buying, where the market going up or down. So you buy in the corrections of ups and downs, and then you got an average price, right? The good thing about buying stocks with a DCA is that this is a good, what you call middle ground, right? So you do an averaging, right? You buy, you might not, you will not be able to catch the highest, but you also will not catch the lowest, but you kind of catch the middle ground. So you get an average price, and it's okay, right? It go up and up, and a lot of investment literature has proven that dollar cost averaging works beautifully over a long period of time, right? So catching the rise and the fall are actually a very good strategy. But Mr. Loo is a huge believer that dollar cost averaging works in theory, but executes poorly in practice. So it's against human psychology to have the guts to buy regularly. What will happen is that if you are thinking of only buying now, you should ask yourself first, why didn't you buy when it's low and buy regularly? Why do you start only on a high? So chances are it's because you have a bias towards buying an asset when it's high. So if you are such a person that starts dollar cost averaging only now, then there's a chance that when the market fall, you either pull out of dollar cost averaging or you buy a lot lesser, right? So human emotions come into play, and I think the only way one can execute a dollar cost averaging, also known as DCA, well, is through an automated process. But then again, and a DCA on automated process is also subjected to human interventions. A lot of people stop the DCA process when the market crashes, right? Then they kind of defeat the purpose of a DCA. So there's a lot of right of human emotions. Too much buying is involved, many time buying. So I'm a huge disbeliever that if you start a DCA now, most likely you will pull out the process or reduce the process when a DCA falls. Okay, so you will fail in execution. So just to map the process, it means that if you're buying the process at an all-time high right now, okay, this is the 2019 process, and if the market retraces, you have to buy at a low and then buy, and buy, and buy, and buy. Chances are when this thing goes down, you will buy less or I stop buying. Okay, let's get real with it. The human emotions will come into play. I say it one last time. If you only start your DCA now, okay, there's a good chance that you'll not be able to take it emotionally. Okay, so let's take a look at option number 3, which is just for you to wait. And you wait until the S&P 500 goes on a retracement, which means it goes down. Well, the good thing is that you allow it to accumulate, and then you allow it accumulate, okay, and wait, and then buys at a discount when it dips. Okay, so of course, you when you buy at a discount, okay, it could be 5%, it could be 10%. It's quite difficult to catch at the lowest, but you roughly know because the graphs have told you that a retracement on average is about 7.5%. We see this magical 7%, 7.5% pretty again and again in history, right? I would say that once it goes to 5 to 7%, your buying can start, and that's what Mr. Loo might do. Okay. Although Mr. Loo is a big crash buyer, but you gotta consider. Now, the cons of it is that buying stocks when it crash is actually against human psychology, right? And everybody will say, "Oh, a huge crash is coming. The AI bubble just burst. I'm going to stop buying right now, but I'm going to wait for it to retrace by and crash by 30%, right?" So you need to have the strong belief that actually this is a bull run correction that is going up and up and up. Just a little correction. So I would be considering doing that, right? If I'm in your position, okay. So just to look at the graph again, in 2019 it went up and then it retraced back and then go up, retrace back. These retracement of 7.5% are not insignificant. They I think are positions of good buy. That's what I would do if I'm in your position, if I miss the boat, right? So, but what about sell now? A lot say, Mr. Loo, I'm sitting a lot of profits. A lot of them send me their profit statement, and please do. I like to see that a lot of you are making profits. Please send me your statements. Some of you send me a Dow statement. Some of you send me your Moo Tiger statements that says that, Mr. Loo, thank you. S&P 500 making huge profits right now. I follow you and things like that. But can I sell right now, right? Now, I can't tell what you should do. Some of you like take profits, if you really have to, and Mr. Loo can't stop you, okay? If you really have to let some air out, okay, take little bits of profit, enough for you to celebrate one Chinese New Year reunion dinner kind of money, small little money for celebration. So you let off some steam. But what Mr. Loo will do is I will hold, and I'll hold it for a long period of time, right? So that's what I'll do, and let the power of compounding builds its course. Right? In time to come, I'll show you some of the numbers that have accumulated right now. The power of compounding goes this way initially, and it goes right out. Very clearly, we are on this amazing exponential rise right now, and it's still rising. So I believe that in the long run, it will compound by 8 to 12% for S&P 500. So I will take the position of just holding it and ride through all the volatility. To be able to say sell now and buy later, sell now and buy later, sell now and buy later is very difficult emotionally. Not many people can do it. I can't do that. Maybe you can, but I don't think I can do that. Okay. So if you find this video useful, please remember like and subscribe this YouTube video, and join our Telegram channel where we have 30,000 people over there. And more importantly, there's a strong group of community experts with their view that can help you answer all your CPF, stock market, and property and investment questions. Just remember, join us at Telegram Loo1865. So with this, thank you, and have a happy, prosperous, and healthy New Year. Okay, 恭喜發財, 恭喜發財, and 發啊!